back to my channel, guys. I had a lot of questions concerning the liquidity I've been dropping of recent, about inducements, about validation, and a lot of people still did not understand about differences between inducement and liquidity. Stay tuned to the end of this video, because in the middle of this video, I'm going to be analyzing a particular signal for you guys. We're definitely going to analyze it together. So it is not the one I've analyzed before. I'll give you guys, we'll analyze it together, and then we're going to finish up with this video. So I want to tell you different types of liquidity that we have aside inducements, and how you can see them, how you can use them in your day-to-day activities while trading the financial markets. Okay, guys, so let's get straight into it. If you're new to this channel, you're welcome. I'm so glad to meet you guys. Hit on the subscribe button and turn on the notification bell to be notified whenever I drop any video. It's going to be of a great benefit to you guys. All right, I teach strategies, different strategies that you can use in different financial markets. You can use it in crypto, you can use it in currency pair, but personally, I use it for synthetic indices. It works across all financial markets, so you can use it for any financial market that you want to use it for. So like I said, I'm going to be giving an explanation as regards liquidity, the different types of liquidity that we have, how you can see them aside inducement. Yeah, that's really amazing. You know, some people are focused on just saying inducement. They just want to talk about inducement. They just feel because everybody is talking about it, they also want to talk about inducement. You know, new traders, and then they just feel, oh, everything is about inducement. They also talk about inducement. Every small thing, they see it as inducement. Now I'm going to tell you different types that we have in the market, different types of liquidity we have in the market. Perhaps in my next video, I'm going to still explain more about inducement for you guys, just to be able to get everything. Now, remember that liquidity moves the market. When we talk about liquidity, liquidity means money, and it is money that moves the market. It is a combined effort of different traders from different parts of the world that moves the market, those combined efforts. So one of the lessons you should learn in this statement is that you don't expect market to just know what is in your favor or what is not in your favor. So stop fighting the market and think the market is against you. This is a combined effort of different traders. It is not about the market, it's about you. So if you want to just learn about how to have a good edge in the market, I think you should learn more about yourself, how you view the market, the fear and everything that follows you while viewing the market. So let's just get straight to what we want to talk about today, guys. So I said earlier that I'm going to tell you different types of liquidity that we have aside inducement. Yes, the number one I'm going to be telling you about is liquidity void. Liquidity void. Some people call it imbalance, some people call it fair value gap. Anyone you call it, I'm just going to term it as liquidity void. Now, when we talk about liquidity void, it simply means you see that gap market lives in the market, maybe between buyers or between sellers. You see, when we are trading to the downside, that very large gap the market leaves, that is, we have a lot of sellers in the market, and then the market is just moving impulsively to the downside, and you're just seeing that jump in the market. You're just seeing that jump in the market. That is our liquidity void. The market leaves void in the market. Market leaves void in the market. Okay, guys, so I'm going to be explaining this void in the market for you guys. So this is volatility 10.1s. This is volatility 10.1s, and I'm going to be using that to explain for you. If you are new to synthetic trading and then you want to trade where I trade 24 hours and 7 days, you can check the link in the description to get registered. It's totally free to register. Yes, guys, it's totally free. You can register and start trading. Deposit and start trading. So when we talk about liquidity void, like I said earlier, I've made a video on imbalance, and then you can check it out also. I guess I'm going to link it in the description box also. When we talk about void, it simply means market give an impulse movement either to the upside or to the downside, leaving it unfilled. Okay, market leaves that place unfilled, meaning the sellers or the buyers dominated the market at that particular point in time. This is 24 hours time frame. Now market seeks to come back and fill those void areas. Okay, and that is why when you want to pick out your point of interest, I am always telling my students that you should look out for your liquidity void in the market. Those areas where you feel market did not balance very well, or market just left there invalid. I mean, market just leaves that place impulsively and market has not been to that place. Now, most times market seeks to come back to fill either the 50% or to totally fill those areas of void. So let's get straight into what we mean by void. You can recognize void in 3 candles. You can recognize void in 3 major candles. Let's start from here. We have 1, 2, 3 candles. You can see that we had this impulse movement to the downside. The market came back all the way to fill this large candle that we had to the downside. This is a liquidity void here, in as much as it is not so visible on this 24 hours time frame. If you check this candle on the lower time frame, you will see that we had a very impulsive move, leaving different gaps, leaving different things in the market. Now, after you have BMS to the downside or to the upside, always check out for the void in the market. Now, let's assume this market continued to the downside and did not come back to fill this area. I mean, we did not have this particular movement back to the upside. The market continue. When market breaks a particular structure, or when market breaks an external liquidity, or market breaks a major liquidity, you will find how the market will come back to this area to fill it. We feel at least 50% of it. Okay, it will feel at least 50% of it, and if it is more than 50%, it simply means we fill it completely. Let's look at other void areas where market has not filled. Okay, now see this, guys. We had this movement to the downside, so let's count this 1, 2, 3. These are 3 candles. So let's see the space we had. We had this huge space. There's a huge space here. Let me pick out this. Okay, we had this huge space here. Check it, guys. We have this huge space around here. You can see that huge space the market left for us. The sellers left that huge space for us. I mean, that's crazy, guys. So you can see this. The market left from here to here. Before another week of a candle formed, it was here. Before the week of another candle formed, it was around this area. It was around this area, meaning from here to here is a liquidity void. It is always dragging markets. In case you don't know, liquidity voids are always dragging back the markets. It will always drag it for market to come back and fill those areas, especially areas that are not balanced. You just have a way of noticing them in the market. Once you see them, just mark out that area where the last week from, which is the first candle that we are looking at. This is the first candle. We have 1, 2, 3. We have this first candle. This is the week we filled it out. Then this is the 3rd week we filled it out. So this is where we have our imbalance, and then we call it the liquidity void. And you can see that this movement to the upside did not even fill up to 50% of this. If we are considering 50% of that void, let's see where we are going to have our 50% if we are considering the 50%. This is where the 50% will be. So let's mark it out. Let's mark out our 50%. Our 50% will be here. This is where our 50% will be. Yeah, yes, exactly. I got that correctly, guys. So this is where our 50% will be. And you can see that market moving to the upside, it did not even get up to 50%, let alone 4 minutes. So this is a liquidity void for us. You mark that liquidity void out. Mark it out because it has a way of dragging back the market. Okay, so the first one I am explaining now is liquidity void. Let's see more of that, guys. Let's see more of liquidity void in the market. You can see this area. Let's see, we had this movement to the downside. You can see 3 different black candles forming. We have this 1, 2, 3. So let's see where the liquidity void is. So we have 1, 2, 3, 3 different black candles. And then this is the first week, the first candle week. We mark that out. You can only get this in 3 candles. You can only get your void properly in 3 candles. So this is the 3rd week. This is the 3rd week that we had formed. So where is our void? This is the void. This particular candle is the void. So let's see our 50%. Let's see the 50% of our imbalance. Let's see the 50% of our imbalance. Okay, so this is the 50%. But what did the market do? The market filled the imbalance, even up to the first candle we counted. The market filled it and used this our points of interest for a continuation to the downside. Now note, when you are marking liquidity void, mark the point of interest that is close to the liquidity void. Mark the point of interest close to the liquidity void. Let's take, for instance, we have this also. We have this void around here. I'm coming, let me mark that out. You can see this impulse movement to the upside. There was a very high impulse to the upside because we had about 4 candles formed. These 4 white candles, we had about 4 of them formed. So we have this 1, 2, 3. So where do we have our liquidity void? We have it around here. Okay, then we have this. So where is the point of interest closer to our liquidity void? Liquidity void are always dragging back price. So anywhere you find them, always mark them out. At least markets will give a reaction from there. You can see this is the PO high closer to that liquidity void. So I'm just going to mark it out. And then we have a very good move to the upside. You can see the market used that particular candle for a continuation, which is the point of interest. So anywhere you find your void, just mark it out. Their liquidity void, and then they always have a way of dragging back prices. They always have a way of dragging back the prices. So that's the first one we are talking about. Before I go to the second one, let's make some analysis that we can use to get signal and then use in making money. So let's just make some analysis and then we'll continue and proceed to the second type I'm going to be talking about. So I'm going to name this the first one. I'm going to name this part 1, and I'm going to make another video about liquidity, types of liquidity that we have. I'm going to make another video about that. So before we go into that, let's just make some analysis for ourselves. Okay, I think we should use volatility 10 Hz. I made an analysis of that in the previous video, but let's just see how we can get our points of interest. Let's use this volatility 10 Hz. Okay, so since we have our void area here, and then let me just see, I'm talking about void, so let me just see what the market is currently doing. Let's make the analysis together, guys. Let's see what the market did from the higher time frame perspective. So our last break of structure is actually to the upside on this particular time frame, but on the weekly time frame, let me see here. I'm unable to get my weekly time frame on trading view, so I'll just look at what the market is doing on this 24 hours time frame and use it to judge what the market would be doing on the weekly time frame. So we had a break of structure to the upside here, then we came back and break structure to the downside. If I had seen what is on this left hand side, I would have just continued. But nevertheless, on the weekly time frame, since we have our last break of structure to the downside, yeah, we had our last break of structure to the downside. After having that break of structure to the downside, this is our primary inducements. We have our primary inducements here. This is the primary inducements, and then we have this place as a point of interest. We have this place as a point of interest. Right? We have this place marked out as our point of interest. So let's see what the market did. But basically on this higher time frame, on this 24 hours time frame, our last break of structure is to the upside. This is our last break of structure to the upside here. I'm going to zoom in. So we have our last break of structure to the upside here. Let's mark that out as our last PMS. All right, this is on the 24 hours time frame. But based on what the weekly time frame is telling us, we are inside our points of interest for the weekly time frame. We're inside points of interest for the weekly time frame. But on this 24 hours time frame, the only way we can align with what is happening on the 24 hours time frame is when we have a break of this low. When this low is broken, then we are in alignment with what the market is doing on that weekly time frame. So yeah, here we go. We have this. Now, the reason I'm marking out this low is because we had inducement here. The market induced this low, making this a major low. We might be having some struggle in breaking this low, but nevertheless, we are conscious of the fact that we are on the weekly time frame. So we just have this low broken for this 24 hours to be in alignment with what is happening on the weekly time frame. So we had our first PMS to the downside here. So even if we are going to be buying the market has to reach this area. This area I'm marking out, the market has to reach here. All right. Market has to reach this area. Even if the market is going to buy. Right, guys. So basically, let's see what the market will be doing here. our last break of structure basically is to the downside. Anywhere you have your void area, now note this guys, anywhere you have your liquidity void, that is the area you're marking out as your last break of structure, because any other thing the market is doing is a range structure until proven otherwise. So we had our last PMS to the downside here. That's our last PMS to the downside. We have our void area. We have this void area, but where is our point of interest? Now, this high, this particular candle, this black candle, was the last candle that took out liquidity. Now, this white candle would have been the candle I would mark out, but basically that wasn't the last candle that happened. So this was the last candle that took out every other liquidity. We'll still talk about points of interest. So I'll drop that on my YouTube channel for you guys. You can also check the ones I have done previously. So I'm going to be marking out this as my point of interest based on this 24 hours time frame. I don't think I need to refine any other thing on lower time frame. So I've done my analysis on just 24 hours time frame, and that is it, guys. The only thing you will go to your lower time frame to do is to get your entry confirmation. But basically, the market has not given me an intent to come back into this area. Market has not given me any intent at all to come back into this area. So possibly we're going to just mark out a PO high here for market to continue to the downside until the market gives us an intent. So our last break of structure was here, guys. This was the last break of structure to the downside. Now we are looking into the higher perspective here. We're looking into the higher perspective, and that was why we marked out the PO high. Also considering this void area. There is no void area here, so I'm not going to be marking out any PO high here, guys. I'm not going to be marking out any PO high because I'm not really seeing any area I can mark out. But the market should give us an intent from this high. This is where the market should give us as an intent. So when market breaks this high, it simply means we are ready to continue to the upside. So I'm not going to be marking out a point of interest here, guys, because it doesn't suit my trading plan. It does not suit my trading plan. So I'm still looking into the higher perspective of what the market is doing. And also, I don't like going to the lower time frame to start looking for what is not lost. No, I just have to stick to what I am seeing in the market. So you can see I've marked this area out. So this is where I am expecting market to get to, even if it's going to take a while. But if I see a continuation from here, if I see a buy continuation when market has taken this high, I'm going to ride the buy continuation for here. But on this volatility 10S, I've not seen a proper market entry. I've not seen a proper market entry. So let's check into another asset. All right, guys, so let's move on. So I quickly made this analysis so that we can be very fast with whatever we are doing, and we'll continue on to the next type of liquidity that we have. So we have this break of structure. I gave this analysis to some of my students, and then we had a very good ride of this buy. So where we're looking out for is this point of interest. You can see we have this void area here. So I'm looking out for this point of interest and this point of interest. So these are the 2 points of interest I'm going to be looking into. I'm looking at this point of interest also. This demand area. So I'm going to wait for the reaction from both areas, but basically let's just put out our long position here. I don't advise you guys setting limits. Personally, I don't love limits. I don't do it because I'm more of an entry confirmation person. So I don't do limits, and I'm not going to advise anyone to do limits. So just wait for the reaction at each areas of the market, and then you are good to go. So let's just check out reactions. Check out reaction move for your entry confirmation. Personally, I don't love drawing limits. So this is it, guys. Let's try to give some refinement here. So I'll try and give some refinement there. Let me see what the lower time frame is saying, then I'll give refinement there, and then we'll continue to the upside. So what I use the lower time frame for is for refinement and also entry confirmation. Like I stated earlier, I'm not going to advise you set a limit for this. I am just going to wait for entry confirmation for us to ride the move. All right, guys, so this is the refinement on the 2 hours time frame. That's going to be also, this is where I refine it on the 2 hours time frame. So we're just waiting for the market to get here, and then we're going to continue to the upside. Just check the entry confirmation, and then we continue to the upside. So let me just draw my entry confirmation. I am looking forward for you guys. So the market is about to get here. I expect something like this. expect something like this to happen. The market is about to get to my entry. So wait for the market to break this particular high. It can give something like this. Then this is where I am going to enter the buy, guys. This is where I will enter the price. This is all about this analysis for you guys. I trust you enjoyed it. So let's just move on. This is where we are expecting the market. So let's just refine this also. So yeah, let's refine this today. That is what we are expecting. All right, guys. So the next one we're going to be looking at, which is the second one for today, is aunt of liquidity. Aunt of liquidity. Now, aunt of liquidity is different from inducements. Aunt of liquidity is the high or the low that fails to break structure, and then the market comes back to aunt it. The market comes back to aunt it with a high or a low. I'm going to give an example of that on chart, guys. So I'm using volatility 50 for the aunt of liquidity. Now, inducements, we will have a break of high, then we'll come back and have a break of low before we break high again. That's for inducement. That's funny, right? I'm going to give you an explanation of that. So let's use our holding line for an explanation of that. So for an inducement, we'll have something like this. Downtrend. The market comes back to this side. We break this low. This is our first break of structure. Then the market comes back to this area to break this high before coming back to break our low. This is just the display of an inducement. Then we continue to the downside. This is our inducement as liquidity. But our aunt of liquidity as a liquidity will have something like this. Stay tuned, guys. We'll have something like this. We'll have this high. Now, this particular low might fail to break this other low. To break this other low, then we'll come back and hunt that high. We'll come back and hunt this previous high. The reason we are hunting this previous high, you'll notice a lot of traders will be thinking, oh, we want to break this particular low, so I just need a continuation at an area like this to make a continuation to the downside. But what will the market do? 80% of the time, the market will do a hunt of this high. The market will hunt this high before coming back to break our structure to the downside. You can see that this low, this particular low, could not break this, so we came back and break our high. So this is aunt of liquidity. Now, unlike this one, you can see we had 3 different break of structure, but here we had just 2 breaks of this high. This is our validation that high is a aunt of liquidity, that this high is a aunt of liquidity. This is the validation over here, that this is a aunt of liquidity. We have our validation as a break of structure, and that is the second type of liquidity I'm going to be talking to you guys about. So let's just check it in the real-time activities. Let's check it in the real-time activity of the market. So our aunt of liquidity is in the market. So let's just check the real-time activities of the market. Okay, guys. So let's look out for our aunt of liquidity. Be sure that you are not picking out inducements as aunt of liquidity, because a lot of people will feel this is actually aunt of liquidity breaking this low. No, this is an inducement. This particular move is an inducement. So be able to recognize your differences between aunt of liquidity and inducement. Now, one of our example for aunt of liquidity is this. See this, guys? This is an aunt of liquidity for us. This high failed to break this high. This high failed to break this previous high. This particular high failed to break this previous high. And then we had the hunt to the downside. Now, where is the validation? The validation was when we had the break of this high to the upside. That is when you validate that truly this is your aunt of liquidity. Why? Because market can just move to the upside and still come down and aunt this low. Market can come into this place and come back to aunt this low. And until we have a break of our structure, that is when we will know that this is truly a aunt of liquidity. Just in case of anything, be sure that your validation is break of structure. So let's look into another example of aunt of liquidity. Let's look into another example of aunt of liquidity, guys. Also beautiful. This is a perfect example of aunt of liquidity. Right. You can see what happened here, guys. Now, there was a movement to the downside that could not break this previous low. There was a movement to the downside, it could not break this low.
Now the market came back and unset this previous high, but the validation is only when we've taken this low. And you can see that the market moved to the downside, acting as though it wants to break this low. But what did the market do? It got to a particular stage here, our draw of liquidity, our liquidity void, draw of liquidity here, and then the market continued to the upside and unset this high again. Now the validation that this is aunt of liquidity is until we've taken this low. That is the validation. So ensure you are consistent with your validation. You don't just pick out anything as validation. We also have stop-ons liquidity. We have series of liquidity, of which I am going to do in the next video, guys. So these are just the two types I am explaining to you guys. So that's going to be all for now. If you have a question, you can drop it in the comment section. I'll be able to attend to it. Keep living in the atmosphere of profit. Bye, guys.